Good morning, everyone. A very good morning to all of you. I am C. Ankit Sharma, again, your income tax faculty for the last session of Salary Head. So today we are going to complete our salary provision. I guess very few provision has left now to complete, and then we will start our test your knowledge questions and the left example illustration of study material. So today we need to cover a lot of provision, a small provision part and a lot of numerical part, which is related to our study material. So I believe that you must have downloaded the notes. You must have revised the provision from the day 1 till day session 4. I believe you must have a pen, paper, calculator, and your study material if you have. So you can see the questions when we are going to discuss those questions. So Diwali is coming, of course, but you should not take rest or you should not skip your studies. Plan your Diwali holidays like this so your preparation should not get affected. So, good morning, Suprabhat, Namaskar, Kem Cho, Vanakkam, Subha Bakhair, etc., etc., etc. And a lot of good morning wishes already has been received. Mr. Parth Rana is saying, good morning, sir. Came so excited to learn something new today. It's good to hear that, of course, that you are excited to learn new things every day with your faculty, of course. Okay, Mohammad Suhail, good morning. Good morning, Mohammad Suhail. Subha Bakhair. Ajay, Jai Shri Krishna, sir. Jai Shri Krishna, Ajay. Okay, Kadambari, good morning. Rachna, good morning. Santhige, good morning. Almashe, good morning. Mumbai, good morning, Mumbai. Okay. Next, Ekta Mishra, good morning. Ramadevi, good morning. Ram Nivas, Swati Krishna, Madhav Tiwari, Pooja, Shreyas, etc., etc. So, again, a very good morning. Suprabhat, Namaskar to all of you. So, let's get started. We should not waste our time. And before, of course, the thought for the day and very beautiful thought. It says, everything is hard before it is easy. So true. When I was doing CA course, I was a very average student. I was a very average student. So if any of you is not that intelligent and if somebody or any one of you is an average student and they think that we cannot do or complete this course because we are any average students and this course is for only intelligence or topper of the class, it's not true. So let me tell you, I was a very average student in my student life, and even I was able to complete this course. So if I can do it, I believe anyone can do it. And everything is very difficult before it is easy. So once I have completed this course, I felt that this is really easy course. There is nothing difficult in this. In the same way, when you must be in your 10th or 11th class, you might be thinking like 10th is the most difficult class in my lifetime. But when you pass 10th class, you might believe there was nothing that difficult in that class. In the same way, when you're doing 11th or you're doing 12th, you might be feeling that these are very difficult courses. These are very difficult class to pass out. But after you getting pass out of that, we think that that course was not that difficult. And same in the case of foundation, you might be thinking, oh God, please, I should clear this foundation course, then I will take intermediate course very easily. But when you pass the foundation class, you might be feeling that it was not that difficult course. Again, if you are intermediate, you might be feeling that this group 1 or group 2 is very difficult. But let me tell you, when you will clear this group and you will be in final, you will feel that intermediate was very easy. So everything was so difficult, so hard before it is easy. And it's easy when we complete that part. Okay. So moving on to our notes. Okay, so we completed our provision regarding interest-free or concessional loan, and I have told you a different kind of trick to find out the value in case of this perquisite. Moving on to our next perquisites. Now, I guess all perquisites are very easy. They are very simple, and they do all have one condition in majority, that if employer is providing you any facility for your personal purpose, then the market value of that perquisite or the amount expended by the employer is going to be your taxable value. Same is case of valuation of traveling, touring and accommodation. So if your employer provide you traveling facility, traveling is for personal purpose, touring is for official purpose. We are not talking about LTC. In case of leave travel concession, only the expenses of journey has been generally borne by the employer. But in this travel case, the all expenses regarding journey, accommodation, etc. is generally borne by the employer. So we are talking about travel. And it says where such facility is not given to all employees. That means this facility, like in an organization, there are 50 employees. But this traveling facility is only providing to some selected employee. So if this traveling facility is given to some selected employee, then the taxable value will be value at which such facilities are offered by other agencies to the public, or we can say in a simple word, the market value of those facilities. So if your employer provide traveling facility to employee and the market value of that travel package is 1 lakh rupees, then the taxable value will be 1 lakh rupees if it is not given to all employees. And if this facility is given to all employees, then it says the taxable value will be the actual expenditure paid by employer in respect of that traveling facility. For example, if it is provided to all employees, the market value is 1 lakh, but employer got the package at 90,000 rupees. In that case, 90,000 will be taxable in the hands of employee. Clear? Tour generally refers to the official part, like business tour we generally say. So how it can be taxable? So if some employee convert some part of this tour into some personal reason, into some personal activities, then that amount which has been expended or incurred by the employer for his personal activities during this business tour is going to be the taxable value. How it will happen? If employee is on an official tour, so let me tell you, if employee is on official tour, only official tour, then nothing is going to be taxable. But if he converted some part of that official tour in any way for some personal purpose, then that personal purpose amount is going to be taxable. How it's possible? And expenses are incurred in respect of any member of his household accompanying him. So employee was going on an official tour, but he accompanying with any member of his household. He take himself a member of his family. An employer said, yes, we are going to pay expenditure incurred in respect of that family member also. So that expenditure which has been incurred for that family member is a technically personal purpose. So that part is going to be taxable, which has been incurred by employer in respect of that member of his household. Very simple. And where any official tour is extended as a vacation, for example, if there is a business meeting of 5 days, an employer asked his employee that you should go and attend that business meeting for 5 days. But employees say that I need 2 more days to visit that place also, that city also. That is extension of tour into a vacation. So that 2 days expenditure, if incurred by the employer, is going to be taxable in case that business expenditure tour is extended as a vacation. So this travel and touring, again, that perquisites say a simple thing. If any personal expenditure made by employer in respect of travel or tour, that amount is going to be taxable. There is nothing, any percentage, any formula, nothing. The value will be given in the question. You just need to taxable them. Clear? 9th is free or concessional food and non-alcoholic beverage. If you're working in an organization and during the office hour, tea, coffee, meal, etc. has been provided by the employer, then the taxability provisions are here. First is tea, snacks provided during office hour. Taxable value will be nil. Free meals during working hour provided in a remote area. The definition of remote area we have discussed in rent-free house provision. that an area which do not have population more than 20,000, any town which do not have population exceeding 20,000, from that town 40 kilometer away area, that is generally treated as remote area. So if you are getting tea, etc., refreshment any place during office hour, taxable value nil. But if you are getting free meals, lunch, dinner, etc., during office working hours in a remote area, taxable value will be nil. Third, free meals provided by employer during office hours other than remote area technically at office premises or through the paid vouchers which are non-transferable. If there is any voucher facility has been provided by the employer, that they are providing voucher facility that you can go and have anything in the canteen of the company or any other outsourcing restaurant, etc., and you cannot transfer that facility to anyone. Either you are going to have that lunch or dinner or you cannot transfer it. In that case, if this kind of facility has been provided, then there will be no perquisite taxability if the voucher is up to 50 rupees per meal. But this exemption can be available only if you opt out from the default tax regime. That means if you opt out from section 115 BAC provision and you are in optional provision, then you can avail this exemption. Otherwise, this 50 rupees per day per meal exemption is not available. Like in the question, it might be given like this, that employee is having this non-transferable voucher facility and the value is 80 rupees per meal. And he availed this facility for 300 days in the previous year. Then what is taxable value? Of course, 80 rupees has been provided, 50 rupees per meal exempted. So 30 rupees for 300 days. You need to taxable 9,000 rupees like this. And if the question says he is under default tax regime, then the full value is going to be taxable. That is 80 into 300. That means 24,000. In any other case, the actual amount reimbursed by the employer is going to be taxable. So these are very simple perquisite, nothing complicated, no provisions like percentage or any formula. So they are just simple provisions. You need to just understand the specific exemption, like in this perquisite, 50 rupees. Moving on to next point number 10. If your employer provide you any gift, voucher or token in lieu of such gift. So any gift provided by the employer in kind, that is going to be exempted up to rupees 5,000, or we can say the taxable value, there will be no taxable value if the value of the gift up to rupees 5,000. So technically says that the value of any gift or voucher or token in lieu of which such gift may be received by employee or by member of his household on any occasion, then that is equivalent to a perquisite. But however, if the value of such gift, voucher or token, as the case may be, is below 5,000 in the aggregate during the previous year, the value of works shall be taken as nil. Now the concept says there is two opinions. For example, if in question it has been written that employee received 6,000 rupees voucher from employer in the previous year. So one opinion says that if it exceeds rupees 5,000, then the full value is going to be taxable as perquisite. So first opinion says you can taxable 6,000 as perquisite. But the other opinion says that up to 5,000 that should be nil and balance should be taxable. So you can take any opinion, but you should write a note that you actually applicable which provision. So in the numerical questions also, which has been given in your study material, etc., both condition has been shown or both kind of solution has been given. Once they have solved, generally they adopt this one scenario. In the study material, the preference option has been applicable, this one. And again, in a note, it has been written that you can also apply this condition, so the taxable value can be different. So in the examination, whatever option you have selected, kindly write a note regarding this. Next is credit card expenditure. Of course, any credit card facility availed by employee. So the amount which has been paid by employer, that is going to be the taxable value. Very simple provision. You can read that provision. If there's any issue, you can ask me. Next is again same club expenditure. If there is any club, the facility for going into the club has been provided by the employer. In that case, the expenditure paid by employer in respect of employee who is availing the facility of that club, that is going to be taxable, except the membership fees paid by employer in this respect. Okay. Next. There would be no perquisite for use of health club, sports, or similar facilities provided uniformly to all employees by the employer. So if it is provided to some special category employee, that is going to be taxable. And if it is provided to all the employees, in that case, that is not going to be taxable. Point number 13, it's a very simple provision. We have already discussed this kind of provision already in two cases. One in rent-free house and one again in car perquisite. It says valuation of use of movable assets. So if your employer provide you any movable asset for use, so that will be a taxable perquisite. Like the provision has been there. Use of any movable asset by the employee or any member of his household. So point 1 says, if it is laptop and computer, the taxable value will be nil always. So if you have availed or your employer provide you any laptop and computer, so irrespective of the purpose you are using it, whether it has been written in the question that it is being used for personal purpose, etc., there will be no taxable value. Okay. If car and other assets specified in the rules has been provided to you, then refer car provision. We have seen in the car provision that if car has been provided to you and you are using it for private purpose only, then 10% per annum of the cost of that car or rent paid is going to be taxable. If it is used for both purpose, then we know there is some taxability provision like 1800, 2400 common. So car and other asset provision will be same as per specifically provided in the rules. Other movable asset exactly has the same concept as the car. So if you have been provided any other asset other than car, like television, like refrigerator, air condition, etc., 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 the same concept applicable, that is 10% per annum of the actual cost of asset or rent paid by the employer, as the case may be. Same concept was in case of furnished house, furnished rent-free house. In that case, furniture, if provided by the employer, the same 10% per annum of the cost or rent, as the case may be, is applicable. So we can say in full salary chapter, if any movable asset have been provided, if that is an immobile asset, that means a house. So that is rent-free house provision, in which we will take 15%, 10%, 7.5%, etc. So we are talking about the mobile asset provision. So any mobile asset, if provided to the employee by the employer, the taxability provision is same. That is 10% per annum of the cost or rent paid, as the case may be. The important provision is this: valuation of transfer of any movable asset. Now we are talking about the transfer of movable assets. So the above provision regarding use of movable assets. So if I am an employer, you are an employee, and if I am providing my car to you to use, if I'm providing a television, a refrigerator for use of an employee, then the above point number 13 provision will applicable. But if I transfer that asset to you, I have sold my mobile asset to you, in that case, this point number 14 taxability provision will be applicable. And it says, if that is a computer and electronic items, means data storage devices like digital diaries, printer, etc., not TV, fridge, etc. TV, fridge, etc. will be in point number 3. So if you are transferring your computer, laptop, etc. to employee, in that scenario, it says the actual cost of such asset minus 50% of the cost for each complete year during which such asset was put to use by the employer on reducing balance method. That means diminishing value method. That means WDV method. We have to charge 50% depreciation, or we should reduce the cost by 50% every year, having on reducing balance method, if it is computer or electronic item. If it a car has been transferred, in that case, this percentage is going to be changed into 20% per annum for each completed year. And if it's any other asset, that will be 10%, but the method will be now straight line method, that is SLM method. So for computer electronic items, 50% reducing balance method. If it's motor car, 20% reducing balance method. If it's any other asset, then 10% as per SLM method. Let me give you an example for that. That will be easy for you to understand. Suppose employer purchase a computer on 1st July 2021 for rupees 1 lakh. He sold this to employee on 1st August 2023 for rupees 20,000. You need to find out the taxable value of this perquisite. So for in case of computer or laptop, we need to find out first how much completed year has been before transferring that asset to the employee. So it has been purchased on 1st July 21 and sold on 1st August 23. So technically 2 years and 1 month. After 2 years and 1 month, this asset has been transferred. So we will charge or reduce the value of that computer by 2 years. The method is reducing balance method. So for the year 1, 50% will be reduced. That means 50,000. Now the second year, 50% of this 50,000 will be reduced. That means 25,000. So after end of second year, the value of the asset as per income tax for the salary chapter is 25,000. So this 25,000 asset value is received by employee for 20,000 from there. So the benefit which has been availed by employee is 5,000. So taxable value of this perquisite will be 5,000 rupees. As simple as that. Suppose if question says that employee received this computer for 30,000 instead of 20,000. So if it is so that he received for his 30,000, there will be no perquisite because the value of the asset was 25,000, and if something which has been valued for 25,000 received by you for 30,000, so there is no benefit for you. Clear? Suppose if it is not a computer but a car. So if it's a car question, then we need to charge reduced value at 20%. That means 20,000 WDV. Then 80,000 value we have, again 20%, 16,000. So 64,000 car is received by employee for 20,000 rupees. So in this case, taxable value will be 44,000. Suppose it's a television. Then 1 lakh. Now the SLM method will apply at the rate of 10%. So what is the benefit of SLM method? That 2 years value we can reduce simultaneously. That means 10,000 per year. So 20,000 will be reduced. So now the value for the purpose of salary chapter is 80,000. Now this 80,000 asset you received for only 20,000. So taxable value will be 60,000. So very simple mathematics. There is nothing difficult. You should learn. You should remember that the rate is 50%, reducing balancing for computer, etc. 20% for car, and for other is 10% SLM. Okay. Valuation of specified security or sweat equity shares for the purpose of section 17(2). So if company provide you any sweat equity shares at a price which is lower than the market price, then the difference of that is going to be taxable as a perquisite. For example, if company provides you sweat equity shares at the rate 200 each, 1,000 sweat equity share has been provided by your employer at the rate 200 each, and the market value of these are 300 rupees each. So 100 rupees per share into 1,000 will be your taxable value, as simple as that. So the fair market value, of any specified security or sweat equity share being an equity share in a company on the date on which the option is exercised by the employee. The date on which the option is exercised by the employee shall be determined in the following manner. So the FMV will be given in the question. If it is not given in question, then we need to find it out as per the information giving following. So you can read these provisions. These are theoretical. Generally, the FMV will be provided in the question. But if it is not so, then we have to find the FMV as per the following concept. Okay. You should go through this theoretical provision. If there is any other security, then the value determined by the merchant banker will be taken in place of FMV. So perquisites, all the perquisites we have discussed, and now the deduction part. So after computing the gross salary, there are three deductions. After computing the gross salary, there are three deductions, section 16(1), 2, and 3. So there is standard deduction. Standard deduction is the amount after calculating gross salary. We have technically three deductions. The first one is standard deduction, which will be available under both regime. It has been written over here. Deduction available under both regime. Clear? And both regime deduction value is 50,000 or salary, whichever is lower. So whatever is your gross salary or 50,000, the lower will be available as deduction out of this gross salary. The other two deduction, one is entertainment allowance deduction, and the other is professional tax deduction. That is only available if you are opt out from section 115 BAC 1A. That means point number 2 and 3, like these two deduction cannot be available if you are under default tax regime. That is only available if you are opt out of default tax regime and you are under optional tax regime. So what are the deductions amount available for entertainment allowance and professional tax? We are going to discuss, but remember that is only available for those opt out from the default tax regime. So standard deduction provision we just gone through. Now entertainment allowance deduction is available only for central and state government employee. Kindly note this, kindly remember this, that entertainment allowance is fully taxable. We have read the provision regarding entertainment allowance. If the question is said that entertainment allowance is 3,000 rupees per month, that is going to be taxable for all employees and the full amount is going to be taxable. But a deduction can be availed after calculation of gross salary. We can calculate deduction regarding this, but this deduction is only available to government employee. So if the question relates to government, then we will provide this entertainment allowance deduction, and only to those employees who opt out from the default tax regime. But if it is other than government employee, then this deduction is not available in any situation. How the deduction will be calculated? There are 3 points we need to find out. First is actual amount, that the amount of that allowance, 20% of only basic salary, and 5,000. So the lowest of three will be allowed as deduction if you are a state or central government employee and you are shifting out from this default tax regime. Professional tax deduction, again, it is available to all employee, but only if you are not under default tax regime. Employment or professional tax will be allowed as deduction in the year in which it is paid. If this tax is paid by employer for employee, then first it will be included in the salary as a perquisite, and thereafter it is allowed as deduction. Clear? Now we have the last provision of relief under section 89. After completing the relief provision, we will move on to solve the numerical part, and that taxability of perquisite fund provision also left. The numerical, I have told you that we will discuss the illustration number 10 regarding that perquisite taxable value of funds, that TP1, PC1, etc. provision. We will start from that example. So let's complete the relief concept. But before understanding the numerical part of this relief, that what actually it says, let me give you an example so you will be able to understand the concept of relief, why it is here, what exactly this section wants to teach you. It's a very practical problem in case of salary. Suppose let's take an example. There is Mr. A is working with XYZ Limited. It's very interesting. Just listen it carefully. And Mr. is working in this organization since 2001. Clear? Now in previous year, 2023-24, suppose his salary, after including all allowances, taxable, perquisite, etc., 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 suppose this is 15 lakh. He received arrear of salary also. Now, what is the meaning of arrear of salary? I am not going to discuss it again because we have discussed this concept in our first session. So he received arrear of salary for rupees 2 lakh. He received arrear of salary received in this previous year, 2 lakh rupees. So now the salary after including this arrear of salary is 17 lakh rupees. Clear? But because arrear of salary means that the part of salary which is received in previous year, in this current year, but it is related to some other preceding previous year, but received in this year due to some retrospective effect. So now this arrear of salary must be related to some preceding previous year. So suppose this arrear of salary is for the year 2015-16. In 15-16, his salary was 10 lakh rupees. So there is some increment in his salary, but due to some dispute, it has not been received in 2015-16. So this increment of 2 lakh rupees, this increment or extra bonus or whatever you can think, this is related to year 15-16, 2 lakh rupees. This increment of 2 lakh is related to 15-16, but due to retrospective effect, that is not due in 15-16, not even received in 15-16, but we came to know about this increment in year 23-24. So we received this increment which is related to year 15-16 in 23-24. So now we have to pay tax on this 17 lakh rupees, including the arrear of previous year 15-16. So that cannot be taxable, or that didn't taxable in previous year 15-16. Why? Because we came to know about this arrear of salary in previous year 23-24. So technically we are paying tax on 17 lakh in previous year 23-24, on the income of 23-24 of 15 lakh, and on the income of 15-16 rupees 2 lakh, because we received this income in current year only. So the problem will arise like this. Suppose the tax on this 17 lakh, suppose the tax on this is 4,50,000. Just suppose this tax, okay? The tax on 17 lakh is 4,50,000. And the tax on this 10 lakh was in 15-16 was 1,10,000 as per the provision of 15-16 previous year. Suppose the tax on this is 1,10,000 and the tax on this 17 lakh is 4,50,000. So total tax paid in these 2 years in aggregate, 4,50,000 in this year and 1,10,000 in that year. So technically assessee paid tax on these both income 5,60,000. Clear till here? So what is actually happening? It's very simple concept that we have income of rupees 10 lakh in 15-16, on which we have paid tax of rupees 1,10,000 in 15-16. Now the 23-24 we have income of 15 lakh rupees, but there is a arrear of salary also for rupees 2 lakh rupees, which is related to 15-16 previous year. So we received that amount in this year, and we did not taxable this 2 lakh in the 15-16 because we could not taxable it. Because we just came to know that this is my income only in the year 23-24, which is related to 15-16. So we have to pay tax on this 2 lakh also in our current year. That is approximate, suppose comes 4,50,000. So the tax paid by us on this year and this year is 5,60,000. Now the assessee say, now the Mr. A say this is wrong. Mr. A say this is wrong. This 2 lakh should be taxable in 15-16 because the tax rate in 15-16 was less. You taxed my 2 lakh rupees in 23-24 previous year, and the tax rate and the provision was beneficial in previous year 15-16. So why my 2 lakh is taxable in 23-24 when it is related to my 15-16 previous year? And if it has been taxable, if it would have been taxable in previous year 15-16, then my tax will be lower than this tax, which is now I am paying 1,10,000 and 450. So what Mr. A is supposed to say that if this 2 lakh has been taxed in 15-16, then my tax liability of both these year will be less than 5,60,000. So now what we can do? Income tax says in 23-24, if you are saying that please taxed my this 2 lakh rupees in previous year 15-16 income, so it can be possible only if we have a time machine. So if we would have a time machine, we can shift you in that time machine. You can go back to in the time and you can revise your return and tax in 15-16 previous year. So that is possible only when we have time machine. Mr. A say, I don't care. You are doing injustice to me. You are taking higher tax than me. I need justice. So department says, okay, let's find it out. We cannot go into the time backside, but at least we can calculate that if you are saying right or wrong. So what department does? Department says that section 89 is going to check this thing and will provide you tax benefit, discount, rebate, or we can say relief in exactly language. So department say on papers we can find it out. Let's do this thing. You want us to do this. Let's do this. That your salary was 10 lakh. And now you want in previous year 23-24 that please text my this salary into this year. So let's text your area of salary 2 lakh rupees in 15-16 on papers. And let's find it out. What would have been if that has been received in 15-16? So what would have been your tax liability? Suppose after including this 2 lakh, his tax liability is now 1,40,000 as per the provision of 15-16 previous year, assessment year 16-17. Clear? And because 15-16 we include 2 lakh rupees area of salary, then for 23-24, now we only taxable salary for rupees 15 lakh because we have shifted that 2 lakh rupees area in the preceding year 15-16. So suppose if we find out tax on 15 lakh in this year, suppose the tax comes 4 lakh rupees. So now as per what assessee wants, this is what actually happened. We include 2 lakh rupees in current year. The tax was 450. In 15-16 without area, the tax was 110. So the aggregate tax of these 2 years has been paid by assessee is 560. Now we are calculating this concept as what assessee wants. What should be actually happen? So now if we'll see, then the total aggregate liability of these 2 years after including area into that year in which it actually relates, that will be 5,40,000. So now assessee say, see, I need to pay 20,000 extra tax as per your calculation, but what should be 5,40,000 only. So you are asking me to pay more 20,000 rupees tax. So department say, okay, it's our mistake. Sorry, we are very sorry. We are providing you that relief, or we can say discount of 20,000 rupees because you are right. Because if we would have taxable that 2 lakh in the previous year, in the preceding year, then your tax liability of both those year aggregate will be lower by 20,000. So whatever the liability discount you want, we are going to provide you. So that is called relief 20,000. Now this 20,000 will be reduced. Listen carefully. This 20,000 will be reduced from his current year tax liability. Technically, we cannot do this practically, that we cannot go back into the time. We cannot change this tax. We cannot ask him to pay this amount in 15-16. So your loss was 20,000 extra. So what we can do? We are providing you a relief in current previous year tax. So that is our relief, which tax 20,000 will be reduced. The current year tax only will be reduced to 4,30,000. So whatever loss is bear by you, would have been bear by you, is provided you as a discount. But suppose what? If it is reverse, like this tax was 5,60,000. And as per the calculation of assessee, suppose the amount of tax of both year is not 540, it comes to 570. So now, if the assessee provision will be applicable, so he need to pay 10,000 more tax. So now the department is correct. What department is doing for you? The tax liability is 560. What you are expecting us to do, what you want to do, due to that, the tax will be 570. So technically, you need to pay 10,000 extra. But this is provision has been made only for the benefit of assessee. So if the reverse situation applicable, that means if there is no discount, but your tax should be higher. This tax should not be, this tax would not be taken by the department. Your tax liability will remain 560. That means your tax will be remain 4,50,000 for the previous year. So that's why the name is relief. Either you will be get the benefit or you need not to pay anything extra. So if the reverse case applicable, that your tax liability is increasing due to what you require, in that case also there is no extra tax need to pay. Whatever tax including area is coming in this situation, you just need to pay 4,50,000. So that is the concept of relief. Without understanding this concept, you won't be able to understand how relief is there, why relief is there. So what we just need to do to solve these questions, excuse me, we just need to do this thing. We have to calculate current year tax, once current year tax including area. And that year tax, that preceding previous year to which the area relate, that tax excluding area. This is actual scenario. So this is actually happened, must have happened because that area has not been taxable in this year. So it need to be taxed in this year. Now what assessee wants, we have to calculate tax as per their calculation. Preceding previous year, now tax including area. And for current year tax, excluding area. So we have two tax. We can say this tax and this tax. This tax as per income tax, what is actually happening, this as what assessee wants. We will deduct this tax out of this. If this is in plus, there will be relief. Relief will be deducted from the current year tax liability. And if it is in negative, then there is no concept of relief applicable. Whatever your current year tax liability will arise, that will be your tax. Fine. We have the specific provision regarding it with example also for your help. This is the concept of relief, what we were talking about. So income tax section 89 relief for salary, area, advance salary, also same provision, gratuity, etc. Also in your syllabus, in your study material, we are only going to discuss the provision regarding salary, area, and advance salary. In advance salary, also the same concept applicable, because in case of advance salary, we have to pay tax for the future salary income. I will discuss it how. Fine. In order to succeed, your desire for success should be greater than your fear of failure. So now the relief, what exactly it says, if an individual receive any portion of his salary in arrear or in advance, or receive profit in lieu of salary, he can claim relief in terms of section 89, read with rule number 21A. So now, first of all, what is the concept of relief in case of arrear? So when arrear or advance salary received, in this case, 2 years information, 2 or more year information will be provided in the question. And we have to calculate previous year 23 or 24 tax liability after relief, because arrear will taxable in previous year 23, 24. So practically that arrear is going to be taxable in our current year, even if it is related to some other year, but we cannot help it. We have to calculate tax on that arrear in the current year. So we have given the name to those year 1, you can write year X, you can write year A, you can write year XYZ, whatever you want. So year 1, previous year in which arrear advance will actually receive. So we are calling that year 1 in which arrear advance actually received. That means current year. And we are saying year 2 to that year to which it relates. Like in our example, 15-16 was year 2 and 23-24 is year 1. So we just give the name to those year to understand the provision. So whatever is your current year, that will be year 1, and that year to which it relates, we are naming it as year 2. Suppose in previous year 22-23 area received in 23-24. So year 1 is 23-24, year 2 is 2002 and 3. Clear? What we need to do? It's very simple. It's pure mathematical question. There's nothing income tax is saying. Income tax is saying this, you need to calculate tax as per the provision. But the concept is very simple. It says do one thing, include area in current year and exclude area from that year to which it relates, and calculate tax like this of both year. Then reverse that situation. 1 minus 2. If the benefit, you can claim it as a relief in current year tax. If there is no benefit, skip it, forget about it. So step 1, firstly find out tax liability as follows. Tax on year 1, that means current year. Income including arrear or advance. Then tax on year 2, that means that year to which it relates, excluding arrear or advance. That aggregate of tax we named total tax number 1. We said it total tax number 1. Now steps 2 say just reverse that activity. Now calculate tax on year 1 excluding area and calculate tax on year 2 including area. So now the tax will be tax 2. Relief if total tax 1 exceeding total tax 2, if vice versa, there will be no relief. Step 3, how relief will be given? Relief is equal to tax 1 minus tax 2. So difference will be your relief. How we will calculate the tax liability of previous year 23-24? The tax of 23-24, whatever it is, including arrear, the relief will be deducted from that as a discount. That will be your answer. So provision is, there is no new provision. It's just a mathematical scenario which is just going to explain you that how you need to calculate this area. There is a solved example also for you. There's a good news in this because the previous preceding year, like assessment year 15-16 we were discussing, or previous year 2-3, the tax including area and the tax excluding area will be given in the question, because you are not able to know the provision of tax calculation, the rate of tax of that year. We just need to know the calculation, etc., for our current previous year. So that previous year tax liability, including area of salary or excluding, will be given in the question. Like this, previous year 23-24, suppose salary is 6,17,000 and 20,000 area of previous year 90-93. 90-93 salary has been given. 90-93 and previous year deposit in PPF has been given. So we need to calculate only previous year 23-24 tax, including area and excluding area. The previous year 90-93 tax, including and excluding, that will be given in question. Like we just need to calculate this calculation. 617 was salary, 20,000 is area, gross is 637, stand deduction 50,000, our GTI is 5,87,000. PPF deposit have a deduction, that is you are going to study in deduction chapter, that is 10,000 deducted. Your taxable income is 5,77,000. Suppose tax is 27,900. Net tax is this. Cess including the tax liability including arrear is 29016. Clear? Now the previous year income is 50,000, and without arrear, the tax of 1,700 calculation will be given in the question. So they will provide that the tax value on salary of 90-93 without arrear is 1,700. So this calculation is irrelevant for you for the previous year 90-93. So the tax including arrear is 29016 of previous year 23-24 and excluding arrear of 90-93 is 1,700. So tax is 30,716. That is called tax 1. Now reverse this procedure. Now in 23-24 step 2, we exclude the arrear from here. The tax is now 24856. We include the arrear in 90-93 and tax will be given in question 4,800. So our tax 2 is 29656. So we are going to pay extra 1,060 rupees if we'll pay as per government provision, and if that arrear would have been taxable in the year to which it relates, my tax liability will be reduced by 1,060. So government will provide you this discount of relief out of your current tax liability of 29016. So now current year tax will be 27956. This provision of relief in case of gratuity, etc., has not been included in your salary topic, the salary chapters. So please skip this provision. I have uploaded the notes including those, but you should not going to read. You should not going to read these provision of gratuity, etc. You only need to understand the concept of arrear of salary and advance salary for the relief purpose. Now the provisions for salary topic has been completed. So now we are moving on to our numerical part. First of all, the provision regarding the provident fund concept, which we have we need to discuss with the help of an example. First, I should take that, and then we will start our provision solution process from our study material. Clear? So this was the concept which is regarding the taxability of perquisite. Before starting this, I will take the queries. Then I will move on to solve this question of taxability of perquisite in case of funds. So, okay, good morning, good morning. Lot of good mornings again. Good morning, Rahul, Suman, Shruti, Mansi. Okay, Niharika, Ruturaj, Komal, good morning. Mansi, sir, you are a very good motivator. Thank you so much. Good morning, good morning, good morning. Okay. Mohammed Sohail is asking, sir, when question is silent, which regime apply, opt out or 115 BAC? That will be given in question that you need to solve the question with the help of which regime. Still, if it is not given, kindly write a note that you are solving with which regime, so that will be considered. But in most of the cases, that will be given in question, do not worry. Next is this meal not regular provided by employer, but occasionally if he gives for one or team for ₹100, in this also taxable in the hands of employee. The meal 50 rupees per plate is available, but if it's not regular, even if it is provided, any meal facility provided during office hour in office premises by employer by non-transferable voucher, that is going to be taxable as per the provision. 50 rupees exempted, balance is going to be taxable. That should be meal, not refreshment. If it is a refreshment, that is going to be exempted completely. Okay. Ms. Almas Sheikh is asking, sir, if the employee is on vacation and he is doing business activities there also, hence get some exemption or not? No. If that employee is on travel, fine. If the company allowed him to go on a travel, even if in that traveling, if he's doing some business activity, sending some mails, etc., still it's going to be taxable. It does not matter, fine. It depends upon what company actually allowed him, a traveling facility or a tour facility. So in that travel, even if it's doing some business activity, that will not be considered. Next is credit card for business purpose is taxable? No. If credit card has been provided by employer to employee, and if he used it for his personal purpose, then the amount used by him is for personal purpose, which is going to be paid by employer, is going to be taxable value. So if any amount is of credit card has been used by employee for the official purpose, for the purpose of his employer activities, then that amount is not going to be taxable. Next is, sir, for two-wheeler transfer depreciation will be 10%. Yes, of course. What is meant of sweat here? Sweat means sweat. Sweat means sweat. Who is asking? Devinder Singh. Sweat equity shares a concept which is provided, the sweat equity share which is provided by the company to the directors or those officers to the company who has from starting who has worked for the company. So technically who sweat for the company, who work very hard for the company. So for their duties, company can provide you sweat equity share for less value, for concessional rate or for free also. That is sweat equity share. You can search on Google, you will find the detail regarding the sweat equity share, Mr. Devendra. Next is Parth Rana, sir, I did not understand example of television in transfer of mobile asset. So in case of mobile asset, if that is computer, the rate is 50% WDV method, fine, reducing balance method. In case of car, that is 20%. Other case, 10% SLM. So if that example what we discussed regarding the television, then 2 years has been completed and the rate is 10% SLM. SLM methods, the DAP remains the same. So we just took the 20,000. That means 10% for 2 years depreciation or reducing balance method, reduced value. So 10% is 10,000 for year one, 10,000 for year two. So aggregate 20,000 we reduced at once. Fine. So that was 20,000. Travel area allowance is generally 200 rupees per month, which is provided by the employer to his employee, depending upon the different places. We have a detailed chart regarding it. We have discussed the provision in session 1. So kindly go through that chart in which there is specifically given the tribal areas, different scenario, and in which scenario, how much allowance is going to be exempted. Generally, it is 200 rupees per month. Next is Raghavendra, sir, it would be charged on due basis. No, in case of retrospective salary, it would not have been charged on due basis also, because retrospective salary is some salary which you came to know in the current year only. Before that, it was in dispute or something. So suppose you are working in an organization from last 10 years, suppose, and in previous year, the current previous year, salary is 10 lakh rupees. But government issued some notification that all the employees who working in this organization will get 2 lakh rupees extra bonus for previous year 16-17 due to any reason. 2 lakh rupees extra bonus. So now in previous year 23-24, government issued this notification that you will receive 2 lakh rupees, which is not connected to your this year, which is connected to previous year 16-17. So that 2 lakh is going to be taxable in this year due to retrospective effect. Now you cannot tax in 16-17 saying it was due in that year. So if it would have been due in that previous year, then the area of salary concept would not arise. So the area of salary means that salary which neither due not received to the year in which it relates, which actually due or received only in the preceding year, but it is related to the some preceding year. So it's not possible that we can due that salary in that year. So if it would have been due, it could be taxable in that year only. Next is yes, department is very intelligent. Next is in 16-17, the assessee, Mr. Mohammed is asking, pays the tax of 110 in 24-25. He's paying 540 as a tax. Why the assessee has take past year tax will be aggregate to current year? No, we are not taking that aggregate for the purpose of calculation for checking this. That either he had paid extra tax due to the normal provision or he can save some tax with the benefit of relief. We just checking it. We are not paying that tax aggregate to the government. The tax of 110 he has paid in 15-16 previous year. The tax 540 he needs to 450 he needs to pay this year. We are not paying that tax to the government. We are just checking that amount. Then either we need to pay high amount or we need to pay less amount. So in current year, he is only going to pay 4,50,000. After relief of 20,000, we just need to pay 4,30,000. It is like this. So relief provision is for your benefit. Department wants to prove you that we are not wrong. If there is any injustice with you regarding the tax due to this area of salary, we are over here to help you. If there would have been any discount or benefit, then we'll provide it to you. So that's a good provision. That's a very welcome provision. Okay. Next, in deductions of entertainment allowance for government employee, then 20% of its basic salary only. There is nothing salary including DA. The word is only 20% of basic. That's it. No monetary, no non-monetary, just a basic salary part, 20% we need to take. Okay. For the whole year. 20% of basic salary for the whole year, of course. Balya Singh, Hindi also mix, sir. I would love to explain the whole provision in Hindi also, but it's not possible. If I'll mix Hindi, so सब प्रॉब्लम हो जाएगा. Okay. Sir, can we do an example on advanced salary also under relief section 89? We can solve it, but we have short of time. You can do one thing. Okay, fine. Let me try. First of all, let me take the queries. Then I'll explain the concept in case of advanced salary also. The same concept is there. Okay. Swati Krishna. Sir, how to remember perquisite and allowances that would be available only SSC is opted out of 115 BSc? I've told in the batch also earlier also that you should take a paper and just from starting the notes, you should write it down which allowances has been provided under section 15 BAC or perquisite. So when you are reading the provision, you should take a simple paper, write it down all the provision which has been availed in 15 BAC or not. So after that, you are able to understand the whole concept of provisions and exemption and perquisite which are not available in 15 BAC or which are available in there. That's the only way you have to do it. So it will be really easy for you. Next is sir, how we can go for taxation for our salary? How we can go for taxation of our salary? Didn't get it. What you are asking, Santosh? Yesterday I visited to IRS, who is sitting in Bhubaneswar related to GST. So what I am still not able to understand what you are asking. Sahid, studying both regimes is hard. No, nothing is hard or difficult. You should take a paper, take your notes from starting till end. It will take only 20 minutes and write down those provisions which are not available under default tax regime and available under normal tax regime. So I have written with each provision, if there is any option available under both regime or under a single regime, I have written all the provision in the notes. So you should take the notes once, take the printouts and just do this thing. Just write it down those perquisites or allowances or benefits which are available under 115 BAC or which is not available. After 20 minutes, you have a simple paper of like 15, 16 points. So you will able to remember that these are available under section 15 BAC or not. So that will be easy. Okay. Devendra Singh, sir, if a father transfer rupees 10 lakh to a daughter as a loan in income tax, what will be income treatment for both? Devendra Singh ji, what are you asking? We are in salary topic. Loan cannot be treated as income anyhow. Fine. So if you're transferring that loan, it should be transferred via bank only. So it would not have been any taxability in the hands of daughter as well as in you. Sir, if employer gives sponsored vacation for any place, if employee is getting, it is free, then it's going to be a taxable perquisite. Whether employer is providing a sponsorship or it's not a sponsorship, but that is going to be taxable in the hands of employee. Manohar Yadav is asking, Sir G, what happened if I take other asset after 2 years and 3 months? So the concept is same, it's complete year. So from the date the company purchased it till the date company transfer it to you, calculate the year and the month. So if it's 2 years and 3 months, months should be ignored. Only complete year should be taken. Even if it's 2 years and 11 months and 25 days, still you will consider only 2 years depreciated value. Clear? Next is Summan Goyal, LTC extension. You said one block of unavailed LTC can be extended up to 1 calendar year, but book says it can be extended up to next block. Can you clearly explain that? The both are same thing. I was saying if the one LTC exemption can be transferred to the first year of the next block, exactly same the study says. First year of the next block, like for the 4 years of a block, you can claim 2 LTC exemption. And if you did not claim any LTC exemption, then you can transfer one LTC exemption into the first year of the next 4 year of block. So there again, 4 year of a block with 2 LTC exemption, you can transfer your earlier block one exemption into this 4 year of block. So the both are same language, same thing. Next is suppose Mithekshwar Bhoi is asking, suppose 2 lakh were basic income, 2 lakh. Okay. In 2019 and 2023, an area of salary is 30,000. And how much need to pay if B limit is 250? We need to solve this question, because if 2 lakh and 240 both are exempted, there would not be, I guess, any relief in that situation. We need to put it into the format and you need to solve it. I guess in your question, there won't be any relief. Nagaraju, sir, other asset not include house appliances and also not allowed 10 years shall not attract taxability. After 10 years, of course, there will be no value will be there. Taxability would be because no value, we have to check it out, whatever we have paid to the employer. That should be deducted from that value. So yes, you are right. If after 10 years, there will be no value, so there cannot be any perquisite taxability in that scenario. Includes all home appliances, everything. Fine. Mr. Prince, yesterday I watched your previous lecture in the evening and had dream of you teaching you in my dreams. Okay. Congratulations. Very good. Okay. If due to arrear of salary, current year salary exceed B basic exemption limit, then what should we do? We do not need to worry about anything. If due to arrear, your current year limit exceed, you need to calculate the tax. And the area related to preceding year, you need to calculate the tax. Then you exclude the area from current year, include in the preceding year. So if tax 1, tax 2 exceed, then there will be relief. If that doesn't happen, it won't be any relief. So write it down, whatever you're asking in the format of a question, then try to solve as I explained to you. It will be, you have your answers. Fine. Okay, now moving on to somebody is asking, what is the provision regarding advance salary? How we will find out the relief in case of advance salary. Now understand, advance salary, area of salary is same concept. There's nothing new. For example, in case of advance salary, how it will happen? Previous year, 2023-24, suppose salary is given 15 lakh. Advance salary, which is related to previous year 24-25, suppose 2 lakh rupees. So we need to pay tax on this 17 lakh rupees. Suppose the tax is again 4,50,000. Now the future year, which is previous year 24-25, the salary was 20 lakh. Including this 2 month salary, including this 2 lakh rupees, which is taxable as advance salary in the previous year 23-24 already. So which has been taxed as advance salary in any preceding year cannot be taxed twice. So we will tax 18 lakh rupees in this year only. Suppose the tax is 4,90,000. Now Sasi again start crying. My 2 lakh rupees has been taxed in previous year 23-24, so I need to pay higher tax. So what government will say? Will say, okay, fine, let's do the way you want. Your aggregate tax liability, now this is my tax 1. 490 plus 450. So that will be 9,40,000. This is tax liability upon you. Now we will do what you want. So now we will take advance salary exclude from our current year. We will take tax on 15 lakh. Suppose it is 4,10,000. And now we will include the advance salary in the year in which it relates. So we will calculate tax on now 20 lakh on this value. Suppose this is 6,35,000. So this will be our tax 2. This was tax 1. This is tax 2. There is nothing new. Same concept. Generally question asked in respect of area of salary, because the future tax rate, because this tax would have been provided by the examiner to you in the question. This 490 will be provided in the question, and in this case 635. So future year tax rate is not here yet. So they cannot, or they might not going to frame this question. Otherwise it will be really easy again. So that will be 4,10,000 and 635. This is 10,45,000. So Government just asking you 9,40,000 and what exactly you want. According to it, tax would be 10,45,000. So there will be no relief. You need to pay higher tax if you opt what you want. So there will be no relief. So this will be your correct tax answer. This will remain the same. Suppose the tax liability of this is 9,25,000. Then you have 15,000 relief. What we will do? We will reduce this 15,000 from our current year. Whatever relief it is, whether in case of arrear or advance, it's need to be deducted from the current year tax liability. So now current year tax liability will be 4,35,000. I hope it's clear who was asking it. Okay. So now moving on to our provision regarding PC2, PC1. So let me solve the question or numerical illustration number 10 has been given in the question. After that, we will move on to our normal provisions illustration related to our book. So the section says that formula to find out the taxable perquisite value, that is TP is equal to. This is one of the most difficult perquisite calculation, but let me tell you, I have made the simplest way to find out the solution. If your friends are taking classes from any other organization, you after solving this, you can ask them that can you solve this question like this, and this is the most easiest way which I just find for yours, so you can very able to see solve the question easily. So that is TP is equal to PC oblique 2, this is our formula, multiplied by R plus PC1 plus TP1 into R. So this is taxable perquisite. TPPC stands for current year contribution. Current year contribution exceeding 7,50,000. So if the contribution into the Provident Fund is exceeding 7,50,000, that excess value will be called PC. Clear? 2 means, of course, 2. There's nothing to explain. R. What is R? We will explain when we will come over here. PC1 says aggregate contribution. I have explained these things in a single line in the provision in the notes also. I am just writing those lines in a shorter way. Aggregate contribution exceeding 7,50,000 except current year. So except current year, because current year excess contribution will be over here. So except current year in preceding years, if there is any excess contribution, the aggregate of that will form PC1. Now what is TP1? TP1 says aggregate taxable perquisite value except current year. So current year TP we are calculating. So if there is any perquisite as per this provision has been taxable in earlier years. So the aggregate, if these are taxable in last 2 years, then aggregate of that taxable value perquisite will be TP1. Now what is R? R is saying I upon F average. I is interest which accrue. F is fund average. So how we will find out the fund average for the previous year 23-24? Opening value of fund as on 1st April 23 plus closing value of fund, that is 31st March 24 divided by 2. That is my fund average. Opening fund value on 1/4/23 and closing fund value of 31st March 24. Now what is interest? Interest says for previous year, interest is what? Whatever your opening balance in the fund plus current year contribution, employer both, less closing fund value. So the difference will be interest. Suppose 100 rupees my opening fund value, 10 rupees my employee contribution this year, 10 rupees my employer contribution is there. And the closing value is 125. So where this 5 came from? This is opening. This is contribution. Now this is closing has been given in question. So what is the meaning of this difference? Difference is the interest accrued. Suppose you have a bank FDR of 1 lakh rupees at the opening of this year. 1 lakh rupees is the opening balance of your bank FDR. Clear? You deposit 50,000 rupees in current year into that FDR. So 1 lakh plus 50, it will 150. So will be the value of closing value of that FDR will be 150? No, it will be higher than that. Suppose the closing value of that FDR is 1,52,000. So how it's happening? Why or where that 2,000 came from? The 2,000 of course is your interest. In the same way, I represent the interest part. How can we find it out? We can take the closing balance as on 31st March 24. Now deduct opening balance on 1/4/2023 less employee contribution current year, employer contribution current year. So what is balance? Balance will be your interest value. That is called I. So you can take it anyway, like opening plus contribution employee plus employer contribution deduct closing balance. That will again come, but in the negative. Or even I just reversed it, that closing balance and reduce opening balance and reduce employee and employer contribution. That will be my interest. So I have explained this also. In this, you can see what is PC, employer contribution to fund exceeding 750 in current previous year. What is PC1? Aggregate of contribution by employer exceeding 7,50,000 except the current previous year. Clear? Now what is TP1? TP1 is aggregate of all preceding previous year perquisite taxable value, if any. That will be taken as TP1. R is return, average of return technically, and it is I upon fund average. I is technically interest. The format is exactly here. So closing balance minus opening balance minus current year contribution, that will be our I, that is interest. And what is average? Average is opening plus closing divided by 2. Clear? Now moving on to our example, which is in study material. Illustration number 10. This is illustration number 10, what we are going to solve. So if you want, we can solve from the study material, or if you want, I can solve it separately also. Okay. Let me solve it separately for you, so you will be understand the provision. So we supposed to remember illustration number 10 has two parts. First, they need to calculate the TP for previous year 23-24. This question is in two parts. They need to calculate the previous year 23-24 information. Sorry, it's not 23-24. This is 22-23. And then they need to calculate previous year 23-24 TP. So first we will solve first the information regarding, they have provided the information regarding previous year 22-23 and 23-24 both. And they asked us to calculate the TP first for the previous year 22-23 and then previous year 23-24. So the formula was TP is equal to PC divided by 2 into R plus PC1 plus TP1. So when we are solving provision for 22-23, the taxable value of perquisite Now PC has been given in the question. If you will see, the contribution is for previous year. The question says basic salary is 6 lakh rupees per month. DA is 8%. He contribute 10% of his pay and DA towards. So DA is as per terms of employment because he contribute the part of DA also. So if we calculate the value, the 8% of this 10%, it will come 7,77,600. So he contribute 10% of his basic salary and DA. So salary will be 72 lakh rupees a year, 8% of DA, the aggregate will be 77,76,000. So 10% he contribute. That is 7,76,600. So PC say exceeding 750, we will take here as a PC. So contribution is 7,77,600. So the excess is 27,600 divided by 2 into R. We need to find the R. Now in PC1, we need to take the contribution of preceding year 21, 22, etc. In the preceding year 21, 22, he was appointed on 1st September 2021 only. He start job from 1st September 21. So his salary will be for 7 months. That is 42 lakh. 8% DA as per term, which is 3,36,000. So total is 45,36,000, and the 10% will come 4,53,600, which is less than 7,50,000. So PC1 says that aggregate of preceding year's contribution when it exceeds 7,50,000. So the contribution is only 4,53,600. So there is excess is 0. So this value is 0. There is no taxable perquisite value in the last year. That is also 0 into R. So there is no solution for this part, that will remain 0. Now we need to find the value of R. R is I upon average of fund. First of all, average of fund. Now remember, we are solving previous year 2022-23 provision. So I will take the fund value, opening value of 1/4/2022 and the closing value is on 31st March 23. The opening value of 1st April 23 has been given 9,81,137. It has been given in question, do not worry. And the closing value is given 27,43048. So we will add both and divide by 2. So my average will come 18,62093. Clear? This is my average. Now what is I? So for the purpose of I, because we are talking about previous year 2022-23. So I will take the closing balance as on 31st March 23. That is 27,43048. Less opening balance, which is 981,137. Employee contribution. This is employer-employee contributions are same. So 777,600 minus 777,600. That is the interest what we received. So it will come 206,711. So that is my interest. That is 206,711. If you solve it, you will get your I, which is 0.111. So 27,600 divided by 2 into 0.111. You will get your value, that is 1532. So this 1532 is the answer. That is the taxable perquisite value. The taxable perquisite value for previous year 22-23. Now listen carefully. When we will solve 23-24, then this 1532 will become my TP1. What is the meaning of TP1? That preceding year aggregate taxable value. So this 1532 will become my TP1 for 23-24 value. Clear? So that is the answer for previous year 22-23. When we will solve now 23-24 previous year. Now the taxable value PC again will the same because the salary remain the same, the contribution remains the same. It will be 27,600 divided by 2. We need to solve the R. We will solve it later. Plus, now the aggregate contribution. Now the PC1. So PC1 means the last year employer contribution exceeding 7,50,000. So the last year contribution, if you will see from the above diagram, this is 27,600, the last year. So what was TP in the last year will become PC1. What was the PC in the last year will become the PC1 in this year, because there is no other contribution before previous year 22-23. Plus we have TP1 that was 1532. So if we will calculate R now, we will find our answer. So for the purpose of R, it's I upon fund average. Now for the fund average, we will take the value as on 1 April 2023 plus 31st March 24 divided by 2. So that fund value is 2743,048 plus 4648555. You just remember the formula. All the information will be given in the question. So that is now 3695802. This is my fund average. 3695802. And now need to find the I. So for the purpose of I need the closing balance. The closing balance has been given in the question is 4648555 minus opening balance. The opening is 2743,048. Contribution is same again 777,600 employee and employer. There's a lot of calculation in this, but the treatment, the provisions are not that difficult. So now the closing value, now my I will be 3,50,307. So if you will divide 350,307 with fund average, my value will be 0.09479. Put the value of R over here. You will get your solution. The answer will be 4069. You can ask to any student, any of your friends who are taking classes from some private institute. Even this is the only easiest way. Otherwise, this is the most difficult provision, and they might skip that provision. They might not teaching this provision in the classes because they think this is really difficult. But you just stick to the formula, solve the illustration number 10, the N11 part of this, and you will find it that this is not that difficult. If you're able to crack the formula, if you're able to understand the PC1, TP1, what is the meaning of R, this is really, really easy for now. Fine. Okay. So that was our notes part has been completed. I am going to take the queries. And after that queries, we will go for a break. And after we will return from the break, I will start solving the question left with the study material and the test to knowledge questions also. So you better have a pen, paper, and your calculator. And if possible, you have your study material. Then kindly open that study material with you. So you'll be able to understand the question one by one. Okay. There is Mansi Gupta is saying, repeat again. Kindly scroll back the video again. I cannot repeat this concept again because it's so difficult. So, Maniji, can we go for a break for 10 minutes? Okay, welcome back. I think you all must have your tea, coffee, etc. Okay, Parthan asking, sir, I am confused in 7,77,600. Actually, uh, let me explain you, Mr. Parth. That is a employee and employee contribution. So the salary is 6 lakh rupees per month. So for 12 months, my salary will be 72 lakh rupees. 8% is dearness allowance, which is as per terms of retirement. Even if it is not written in the question that DA as per terms of employment or retirement benefit, but because it has been written that 10% of salary and DA is contributed to RPF. So in RPF, only that DA can be contributed, which is as per terms of employment. So we considered it as terms of employment. So that is 5,76,000. That is 77 lakh 76,000. And 10% contribution in Provident Fund. So that is 7,77,600. Clear? And it is exceeding 7,50,000 by 27,600. So that will be my PC. Okay. So moving on to our notes. Before notes, of course, there is a short story for all of you. It might motivate you in some way. So इतनी स्टोरी मैं सुना रहा हूँ आप लोगों को, कुछ फर्क पड़ता है, कुछ होता भी है, बस सुन लेते हो टाइम पास के लिए. फाइन, इट्स नॉट अ स्टोरी, इट्स अ रियल थिंग. लेट्स डिस्कस सम रियलिटी. ओके, एक बर्ड है ईगल, हम सब लोग जानते हैं ईगल. और ईगल की जो लाइफ होती है जनरली वो 60 to 70 ईयर्स होती है, बट मोस्ट ऑफ द ईगल 40 ईयर्स तक मर जाते हैं. उसका रीजन है, ईगल जब 40 ईयर्स का हो जाता है तो उसकी जो बीक होती है, जो चोंच होती है ना, वो एकदम बैंड हो जाती है. बैंड मतलब वो ढंग से अपने शिकार को खा नहीं पाता. जो उसके नेल्स होते हैं, पंजे होते हैं, उसके नेल्स भी बैंड हो जाते हैं, तो वो ठीक से शिकार को पकड़ भी नहीं पाते. और जो उसके विंग्स होते हैं ना, वो बहुत भारी हो जाते हैं, पुराने हो जाते हैं, भारी, तो वो फ्लाई भी ठीक से नहीं कर पाता. तो आफ्टर 40 ईयर्स वो टेक्निकली एक तरह से शिकार करने के लिए फिजिबल नहीं रहता. तो उसको जो बचा कुचा खाना है वही खाना पड़ता है, और अगर वो नहीं मिल पाता तो वो जनरली मर जाता है. बट उन ईगल्स में से कुछ ईगल्स ऐसे होते हैं जो ऐसा होने के बाद क्या करते हैं, वो एक ऊंचे माउंटेन पे चले जाते हैं और वहां पर जाकर अपनी बीक को, अपनी चोंच को बार बार उस माउंटेन पे मारते हैं. वो बहुत पेनफुल होता है, बहुत बहुत पेनफुल होता है, बट वो कंटिन्यूसली उसे करता रहता है, करता रहता है, करता रहता है. और एक टाइम के बाद उसकी जो बीक है वो टूट जाती है, और जो उसके नेल्स जो बैंड हो गए हैं उन्हें उस माउंटेन पर घिसता रहता है. वो भी बहुत पेनफुल है, बहुत ही पेनफुल. तो उसके जो नेल्स हैं बैंड हुए वाले वो निकल जाते हैं. फिर आता है, नए नेल्स आना शुरू होते हैं, नई बीक आना शुरू होती है. एंड उसके बाद जो उसके पंख हैं जो बहुत पुराने हैं, जो बहुत हैवी हो गए हैं, जिससे वो उड़ नहीं पाता, तो अपनी बीक और अपने नेल से वो उन सारे विंग्स को निकाल देता है खुद से. अगेन इट्स वेरी पेन. और इस काम में लगभग 5 और 6 मंथ्स तक लग जाते हैं. तब तक बहुत थोड़ा खा पाता है, बहुत मुश्किल से कुछ सरवाइव कर पाता. एंड यू व्हाट हैपन, आफ्टर 6 मंथ्स उसको नई बीक आती है, बिल्कुल न्यू. न्यू उसके पास नेल्स होते हैं और न्यू फेदर आ जाते हैं, न्यू विंग्स आ जाते हैं, और वो एक नया ईगल बन जाता है, नया एकदम. और उसके बाद वो फिर नेक्स्ट 20-30 ईयर्स और जीता है, आराम से शिकार करता है. सो दैट मीन्स कि सेक्रीफाइस तो करने ही पड़ते हैं लाइफ में अगर आपको कुछ अच्छा अचीव करना है. कुछ बाकी ईगल्स की तरह वो मर भी सकता है, बट नहीं, ही डिसाइडेड दैट ही विल सेक्रीफाइस, ही विल डू हार्ड वर्क so he can survive and live life ka king. In the same way na, like after 20-22 years when you completed your 12th, उसके बाद हमें चॉइस करनी है कि हमें सिंपल एजुकेशन लेनी है, लाइक बीकॉम करना है, उसके बाद लाइफ कैसी हो जाएगी, बहुत डिफिकल्ट, बहुत मुश्किल, फ्यूचर बहुत मुश्किल होगा, बिकॉज इफ यू आर नॉट एबल टू अर्न money and reputation, then survival is really, really difficult, just like that eagle who actually decided that he will survive on others' things. So that life doesn't mean anything. बट उनमें से जो बच्चे सीए प्रोफेशन में जाते हैं या इस तरह के और प्रोफेशंस में जाते हैं, वो उन्हें सेक्रीफाइस करना ही पड़ेगा. सो इफ यू आर लीविंग द पार्टीज, if you are not going to watch movies, if you are not watching television, if you are not doing Instagram a lot, if you are not doing WhatsApp a lot, जो आपके बाकी दोस्त कर रहे हैं, बाकी लोग कर रहे हैं, तो दैट मीन्स आप उस ईगल की तरह सेक्रीफाइस कर रहे हैं. पर जब ये 3 years का टाइम निकल जाएगा, आप लोग सीए बन जाएंगे, तो आप एक नए इंसान होंगे, द पावरफुल, मोर रेपुटेशन देन द अदर्स, जो इस टाइम सिर्फ ग्रेजुएशन कर रहे हैं, सिर्फ कुछ भी पढ़ाई कर नहीं कर रहे ठीक से. तो जो बच्चे सेक्रीफाइस नहीं करेंगे, वो वाले ईगल रह जाएंगे जो 30-40 years के बाद दूसरों पे डिपेंडेंट हो जाए. और जो आप सेक्रीफाइस आज करोगे ना, इट विल वर्थ. मैं आपको बता रहा हूँ, ये आपकी लाइफ का सबसे अच्छा काम है कि आपने इस कोर्स को ऑप्ट किया है. एंड 3 years बाद आप यही बात बाकी लोगों को बोल रहे होगे व्हेन यू विल बी अ सीए, दैट ये आपकी लाइफ का सबसे अच्छा काम. सो बी दैट ईगल जो हार नहीं मानता, जो सेक्रीफाइस, और पेन तो होगा ही बिकॉज इट्स डिफिकल्ट, दैट इज वाई इट्स इंपॉर्टेंट. तो अगर ईगल बनना है, सर्वाइव करना है, सेक्रीफाइस भी करने पड़ेंगे. ओके, सो वट एवर यू डूइंग टूडे, दैट विल मेक योर टुमारो. So moving on to our numerical part now from the study material. So illustration 10, 11 we have already completed. Let me see. You look, मैं आज भी मेहनत करता हूँ. Fine, I know all the solution. Still, I have to write all these provision, these diagram for you. The test your knowledge question I solved separately for you. Separately, I personally solved it because the assessment tier has been changed. Being a teacher of income tax, that's the most difficult thing. Everything has been changed after 6 or 7 months. The notes need to be updated. The question need to be solved again. So I personally solved all the question of test your knowledge. I want to show you that it's not this. So we have to be that eagle. We have to work till our life, end of our life. That is the only way we can survive. So that car perquisite diagram what I have made in the class, I have already made that diagram in manual form also. I'll upload this also on the portal, so it will be really easy to you to understand. In the car perquisite, there was a concept which says if you have more than two or more cars, so we have to find out one car should be taken as official and private both, and all other cars will be treated as private. So for that purpose, I have prepared a question which is not in the study material. I have prepared a question for you. I'll upload that question also with solution. You can check it out later today. So moving on to the questions, let's solve that from the study material. I hope you all have your paper, pen, calculator, and study questions material with you. We have solved a lot of illustration. Okay, this has been solved. In session 13, we have discussed. I guess we need to take it from illustration number 14. Illustration number 14. Yes, it's a rent-free house question. So the simple question I'm going to solve in this notes also. Only on those notes we are discussing. Okay. So the page number 3.75, illustration number 14, we are going to discuss first. That is for rent-free house. It's a very simple question. Okay, this is rent-free house question. Mr. C, a finance manager in ABC Limited, the company has provided him with rent-free unfurnished accommodation in Mumbai. Okay, he gives you the following particulars: basic salary 6,000 per month, dearness allowance 2,000 per month, 30% is for retirement benefits and bonus also. So for the purpose of rent-free house, the company has provided him with the rent-free unfurnished, even though the house allotted to him on 1st April 23, he occupied the same from 1st November. So how we need to solve it? Because he occupied from November. So from November till March, we need to take the salary for the purpose of rent-free house, because it is not given on rent. So it is owned by employer and he is in Mumbai. So the population of course must be exceeding 25 lakhs. So we will take 15% of salary. Salary means all monetary payment except arrear, advance and DA as per non-term. So we will take 6,000 per month for 5 months. Then DA is 30% for retirement benefit of this 2,000. So that will be 600 into 5 months and bonus 1,500 into 5 months. So take the value of all these things, that will be 40,500 rupees, and 15% of this is going to be taxable perquisite, that is 6,075. Solved. Fine. The next is using the data above in the previous illustration 14, compute the value of the perquisite if Mr. C is required to pay a rent of 1,000 per month to the company. So I have told you, if there is any perquisite except the car perquisite, 2 cases, those are fixed. Except that perquisite, if anything has been recovered from the employee by the employer in respect of any perquisite, that is going to be deducted or reduced from that value. So earlier in the question, the perquisite value was 6,075. Clear? 5,000 for 5 months has been recovered. So taxable value will be 1,075. So there is nothing to solve. The answer is 1,075. Now illustration number 16. Using the above data 14, the compute the value of the perk if ABC Limited has taken the accommodation on a lease rent of 1,200 rupees per month. So now they converted the question into lease rent. So if there is a lease rent case, then we will take 15% of this value, 6,075 same, and compare it with the lease rent, which is 1,200 rupees per month into 5. That means 6,000. So lower will be now 6,075 or 6,000, whichever is lower is 6,000. And 5,000, the rent recovered will be deducted. So taxable value will be 1,000 rupees. Again, it's too simple to solve. You can read it out. It's very simple. Illustration 17. Yes, this will solve. Using the data above, in illustration 14, compute the value of the perquisite if ABC Limited had provided WDV. So it says in illustration number 14, you need to add this thing out. So that the furniture has also been provided. Television, WDV 10,000, we will skip the WDV, will take cost, 10% of cost for 5 months. And 2 air condition, which is on rent, 400 rupees per month each. The television was provided on 1st January 2024. However, C is required to pay a rent of 1,000 per month to the company for the use of furnished accommodation. So we know the taxable value. The taxable value is 6,075 as above. Now the question says, this is 6,075. Now for the furniture, the television has been provided and the cost was 25,000. So 25,000, 10%, and for 5 months. 25,000, 10% into 5 upon 12. So that will be the value for the purpose of television. That is 1041. And the air condition value, that will be for 400 rupees per month for, okay, television has been provided for 3 months, I guess. Just a second. Okay, yes. Television has been provided from 1st January 2024. Air condition was for 5 months, but television is for from January 2021. So television value will be taken for only 3 months. That means 25,000 into 10% into 3 upon 12. So that will be 625 rupees and 400 rupees for 5 months for 2 air condition. So that will be my value for the purpose of air condition. Both need to add. So we will have your answer. Fine. It's again simple. This is a solution, you can see. Using the data given illustration 17 above, compute the value of the perk if Mr. C is a government employee. So if he's a government employee, then we will take license fees or rent as per government as a taxable value of perquisite. So 700 into 5, that means 3,500 will be the taxable value of unfurnished part. And the furnished value will remain the same, 4,625. So taxable value will be the combination of both of them, that is 8,125. 5,000 recovered, that's need to be deducted. Now the perquisite part, car facility, we have discussed that provision. Now illustration related to car perquisite. Okay, illustration 19, Mr. X and Y are working for Messrs. Gamma Limited. As per salary fixation norms, the following perquisite were offered. For Mr. X, who engaged a domestic servant of 500 rupees per month, his employer reimbursed the entire salary paid to the domestic servant. So that will be an obligation of employee met by employer, taxable for all kind of employee. Mr. Y, he was provided with a domestic servant per month as part of remuneration package. So for Mr. Y, it's going to be taxable if he's a specified employee. So that is the theoretical question. You can read the solution. Next question. Okay. Mr. X retired from services, page number 3.90. Mr. X retired from services, Y Limited, as on 31st January 24 after completing service of 30 years and 1 month. He had joined the company on 1st January 1994 at the age of 30 years, received the following on his retirement. Okay. So he received the gratuity. Then leave encashment. As per the scheme of the company, he was offered a car, an amount of 3 lakh as commutation of pension. Company present him a gift voucher 6,000. In case of gift voucher, I have told you, if it is exceeding 5,000, then either you can take the full value as taxable value, or you can take exceeding 5,000, that means 1,000 as taxable value. His colleagues also gifted him a television worth rupees 50,000. So that is not going to be taxable anywhere. Because if employer provide him, that is going to be taxable. If his colleagues provide, that is not going to be taxable under salary head. His basic salary is 20,000 per month and 50% DNS allowance per month for the period from 1st April 23 to 31st January 24 till the time of his retirement. Received pension of 5,000 per month for the period of 1st February 24 to 31st March 24 after commutation of pension. So how we will solve it? I have told you, first of all, you have to write in every question computation of total income or salary for assessee for assessment year so and so. So we can see in the question, because he retired on 1st of February. So for 10 months, he was doing job in the current previous year. So the basic salary for 10 months, it's 2 lakh rupees. Clear? DNS allowance is 50% of basic salary, and as question does not inform us that whether it is as per terms of employment or not, so we will consider it as not as per terms of employment. And I advise you always in the question, write it down whether it's terms of employment or not. So it is not as per terms of employment. The voucher provision, I have told you that it will be either you need to taxable the 6,000 full value, or you can also tax 1,000. Both are acceptable view. Now the car provision, the car says company offered him a car which was purchased on 30th January 2021. Now understand, car has been purchased on 30th January 2021 by the company for 5 lakh rupees. Clear? Company has recovered 2 lakh from the car. So company sold it to the employee for 2 lakh rupees. Company has recovered, company depreciate the vehicle at the rate of 15% of SLM. It does not matter what dep rate company charge. We have to apply as per the provision of salary. So as he retired on 1st February 2023, So from January till 1st February 2023, technically 2 years has been elapsed. There is depreciation of 21 to 22, January 21, which was purchased by a company on 30th January 21. He is retired from 1st February 2024. So technically 3 years has been elapsed from this date till the transfer, 3 years and 1 month approximate. So we will charge depreciation, or we going to reduce the value of car 3 times. So this we can see over here, the rate has been given 20%. So first year reduction value is 1 lakh. That means we have left with 4 lakh. Then 20%, that is 80,000. So we have left with 3,20,000. Then 20%, that is 64,000. So we have left with the value of 2,56,000. So this 250 value of car has been transferred to employee for 2 lakh rupees. So there's a benefit of 56,000 rupees. So that is the value of the car we derived. Next, gratuity. Point 1 says gratuity received by him 6 lakh and he was covered by payment of gratuity act. So for the purpose of gratuity calculation, the amount received, first point is, then the government fixed value 20 lakh rupees, and because he is covered by payment of gratuity act, so 15/26 multiplied by the basic salary plus DA all included for this scenario because it's gratuity B case, and for B case all DA, term, non-term included. And year of service is 30 years. So that will come 80,769. So this is going to be a taxable value. The exemption will be 519,231, sort of. Clear? So that is gratuity taxable. Now moving on to our leave encashment provision. For the leave encashment, it says he received 3,30,000 for 330 days leave balance in his account. Every year employer provide him 30 days of leave for each complete year of service. So for leave encashment, the first point is amount received, which is 3,30,000. The second is 25 lakh, the fixed limit. The third is 10 into AMS. So AMS in the question is 20,000 because for the purpose of leave encashment, we took only that DA which as per terms. So that value is 2 lakh rupees. Now the fourth value which says leave earn minus leave avail. Leave earn minus leave avail, AMS upon 30. So leave earn, 30 days leave has been given for a single year. So that will be 30 years leave, 30 days leave for 30 years. That is my leave earn. For leave avail, I have to find it out with the help of leave unavail. So that says total leave, which is 30 into 30, 900. Minus leave unavail, which is given in question is 330. So technically 570 is my leave avail. So I will deduct 570 out of leave earn. We will solve it and the value will be 2,20,000. So out of these 4 values, 2 lakh is the minimum value that is going to be exempt, and 330 minus 2, yani 130 is going to be taxable value. So these are the provision we have already discussed separately in questions. Next is uncommuted pension. The pension is given 5,000 rupees per month from February. So 2 months uncommuted pension is 10,000. That is going to be taxable. Next, commuted pension. So for the purpose of commuted pension, the information given in the question, it says that 3 lakh rupees is the commuted pension for 2/3 of the value. So if you'll find the whole value of pension, that will come 4,50,000. Gratuity also received, so exemption will be 1/3 of total value of pension, which will come 1,50,000. Taxable formula received minus exempted. So receipt was 3 lakh, out of which 150 exempted. So taxable pension is 1,50,000. So that is the solution. You can see the detailed solution for each perquisite, each value from your study material also. Fine. Next is illustration number 21. It said Mr. Bala in ABC Company Limited as a finance manager gives you the list of perquisite provided by the company to him for entire financial year. Domestic servant was provided at the residence of Bala, salary of is this much amount. So taxable value will be 18,000. There is no difference. Free education provided to his 2 children in the school maintained by the employer. One children value is 900 rupees, other fees value is 1200 rupees. So up to 1000 per month is exempt. So this child value is not going to be taxable. And for this child, again, there is no two concept. Either you can taxable the full value because it's exceeding 1000, or you can taxable only 200 rupees per month because up to 1000 it is exempted. Both is optional you have. Third point is for air conditioned television, the transfer of asset, you can solve it with the help of SLM method. I want to make you practice the test knowledge question also. So we are just skipping these questions because these are simple points. We have already discussed these kind of provisions earlier. This is the provision regarding the loan liability, interest-free loan. I have discussed this question. It is a very important question, very interesting also. We have discussed this question and solved it in the last session also. So I'm not going to discuss it again. So I guess the theoretical part is the sweat equity question. ABC Limited allotted 1000 sweat equity share to Shri Chand in June 2023. The shares was allotted at rupees 200 rupees per share as against the FMV of 300 rupees per share. So what is the taxable value? So we have read the provision regarding it. It says if the sweat equity share is provided to the employee less than the market value, the difference will be the taxable value in the hands of employee. So the question one of this is asking what is the perquisite value? The answer will be 1000 into 100 rupees, that will be 1 lakh. In the case of subsequent sale of those share by Shri Chand, what would be the cost of acquisition of those sweat equity share? This is the question regarding the capital gain provision. What is the cost of acquisition? So that will be discussed in detail when we will study the topic capital gain. For time being, I can tell you the value you have paid, that is 2 lakh rupees plus whatever has been included as the taxable value of perk. So aggregate will be your cost of acquisition as per capital gain provision. So in that case, it will be 3 lakh rupees. Accommodation of lease. Again, these are simple provision regarding car facility. X Limit provides the following perk to its employee. Accommodation taken on lease by X Limit for 15,000 per month. Rupees 5,000 per month is recovered from the salary of Mr. Y. It's a simple point. Car perquisite, a car of 1200 cc which is owned by X Limited and given to Mr. Y to be used both for official and personal purpose. All running and maintenance expenses fully met by employer. He is also provided with a chauffeur. Let me tell you, if you want to solve the car perquisite taxable value, first of all, you have to decide as per the diagram that in the question which scenario has been given will fall under which cases we have discussed. So first of all, a car 1200 cc which is owned by X Limited. So car is owned by employer. So just forget about that part which discussed the car owned by employee. So we are moving on to our second part which is says car owned by employer. Great. Now we need to see who is actually paying the expenses. So it says car is used for both purpose. Very good. Running and maintenance expense paid by employer. So car is owned by employer and expenses paid by employer. So we are talking about the last case where car is owned by employer and expenses also paid by employer. Now that case have three situations: 100% official, 100% private, and both. And it says it's a both case. So technically, if you are able to find that the question which has been asked regarding the car facility does fall in which case, so you are going to solve this question very easily. So car owned by employer, expenses by employer, it's used for both purpose. That's the last case. It says if up to 1600 cc, 1800 rupees per month, more than 1600 cc, 2400 rupees per month plus 900 for driver or chauffeur. So car cc is 1200, that means 1800 rupees per month plus 900 into 12 is going to be taxable value. Clear? Deductions concept we have discussed. These are deduction provisions. You can solve it, of course. Relief. So relief question I have already shared with you. You can also try this relief question also. Or in this question, remember, you do not need to learn these tax rate, etc., because the tax value must have been given in the question generally. Okay. So now moving on to our test your knowledge questions. That's the revision part. Before test your knowledge, let me see if there's any query regarding any question. So I'll solve it for you. Swati Krishna asking, what if the company's contribution is different? There will be no difference. If the company's contribution is different, then when we will take employee contribution and employer contribution, so your contribution will be different and company contribution will be a different amount. There is no applicability of this difference on the solution. The provision, the process will remain the same. There is no difference. That will be solved as accordingly the amount of increment, amount of contribution is changed from the amount of contribution of employee. For example, in our example, our contribution, company contribution was 7,77,600. Suppose employee contribution is 7,50,000. So how does it matter? For the purpose of PC or PC1, we need to take the employer contribution value. For the purpose of I, we need to deduct employee and employer contribution both. So if employee contribution is 750, and employer is 777,600. So we will take those contribution value. There is nothing different. Next. Yes, sir, you are in the path through your stories and thoughts. Well done. GST practitioner, do not ask these kind of questions, Mr. Santosh. Please, it's a request. Rama, sir, very effective story. You always tell us it's obvious motivators. I do not others, but it will inspire me. So even if one of you is getting inspired by the story, my work is done. It does not matter if any one of you is inspired by the story or my studies or my motivation. I'll be obliged, of course. Okay, so okay. Neha is saying, sir, yes, sir, I never attempted any function Diwali also, sir, only focus on studies, so no social media. Yes, sir, Wi-Fi from ICAI, Neha, very well done. Because you will have your lifetime to celebrate those festivals using social network. Once you will be a chart accountant, you have all life to do anything, whatever you want, okay? Rama is asking, sir, in the exam, if any one point or provision wrongly work out, then will the examiner will give marks on a step basis or he will give 0 marks? There's a step marking. It has been written in your, of course, circular also that step marking will be there. Do not worry about it. Okay. Sir, how FMV will be cost of acquisition in capital gain? Thank you, Mr. Srinivasan Venkatraman. Look, Srinivasan, this is a topic related to capital gain topic. So I can explain you if capital gain topic is going to allot it to me. But whatever faculty or to whomsoever faculty is going to take the class, he will explain you. But remember, I am not saying FMV will be the cost of acquisition. No, I said that 2 lakh rupees actually paid by him, that amount plus the value treated as perquisite, that is 1 lakh rupees. That will be cost of acquisition. That's a different scenario, that it will be equivalent to the FMV automatically. But for the purpose of theoretical provision, we cannot write that FMV will be the cost of acquisition. We will write the amount paid by him plus the value treated as his taxable perquisite. That aggregate will be cost of acquisition. Okay, so that's a different thing. Okay, so now moving on to our questions. Test your knowledge. First question regarding the house rent allowance. Okay, where are my solutions? This is my solution. So house rent allowance provision we have discussed, I guess, in our first session, and there was a note number 3 which says that if in any case there is any change in these factors. First one was HRA received. Second one was shifting the house from metro cities to other cities because there is a percentage change from 50 to 40%. Third criteria is your salary, and fourth criteria is rent paid. So if there is any change in these 4 characters or 4 values during the previous year, then for that part we have to solve the provision separately for HRA, and for the other part we have to solve the provision separately. So in this question, there is a lot of change happened. You can see Mr. Mohit is employed with XYZ Limited on basic salary of 10,000 per month. He is also entitled to a DA, 100% of basic salary, 50% of which is included as the terms of employment. Clear? The company gave him house rent allowance 6,000 per month, which was increased 7,000 per month with effect from 1st January 2024. So from 1st January 2024, we have to calculate the question value separately. But wait, there are more changes. He also got an increment 1,000 per month in his basic salary with effect from 1st February 2024. So because salary change, so technically from 1st January, we need to calculate HRA separately till 31st of January. And because from 1st February, the salary change, so we have to calculate HRA provision separately from 1st February also. Rent paid by him during the previous year 23-24 is as under. So you can see there is, for now, there is 2 changes. So at least you have to calculate HRA twice in this question, but it's more to come. April and May, nil. There is no rent paid because he stayed in his house. So technically, from April to May, this 2 months, full HRA is going to be taxable, as the provision says. If rent paid is 0 or he stays in own house, there is no exemption. So full HRA is going to be taxable for these 2 months, 6,000 per month. So that means 12,000 HRA is going to be taxable for this situation. So one time duration is from April to May. From June to October, the rent paid by him is 6,000. So one calculation from June to October we need to solve, because there was no rent paid. Here is rent paid is 6,000 per month, for which the provision will remain the same, like HRA received, then rent paid minus 10% of salary, then 40 or 50% because he is in Ghaziabad. So for this duration, it will be 40%. Clear? Now more. Till November to March 24, the rent paid is 8,000 per month from an accommodation in Delhi. So from November, again, the time period has been changed. First calculation, second, now the third calculation will be from November because the rent paid change as well as the place also change. So from November till December. Why till December? Because from January, this HRA has been changed. So till November, December, we have to solve separately. Then from January till January, only 1 month calculation. This is 2 month calculation. We have to solve HRA separately, because from February, the salary change. And then from February to March, we have to solve the question separately. So technically, we have to calculate HRA 5 times in this question. Do not worry. I am going to solve it for you. I am going to prepare the question. You can put the value later on and find the solution also. Do not worry. So this is the scenario. First, HRA we need to solve. April and May. Okay. So for April and May, there was no rent paid. So that will be taxable HRA, 12,000 rupees. Clear? The second duration is June to October. That means 5 months. That was 2 months calculation. That is 5 months calculation. So for these 5 months, the HRA receipt was 30,000, 6,000 rupees per month. Then rent paid was also 6,000 per month. So 30,000 was also rent paid minus 10% of salary. So 10% of salary, if you'll find it out, it will come 7,500 rupees. Basic salary plus DA. So this value will be 22,500. And because he's in Ghaziabad, so we will take 40% of salary, that will come 30,000. So lowest is this exempted, then taxable value will be 7,500. Clear? Now the third case, we have to calculate it from November and December. That is 2 month calculation, for which HRA is still same, but rent paid change. So now rent paid is 8,000 per month. That is for 2 months, 16,000, and 10% of salary. That 10% of salary will come 3,000 rupees. Basic salary and DA, if you will add them, that will be 30,000. So 10% will be 3,000. So that will come 13,000, second value. And because he moved on into the Delhi, so it will take now 50%. So that will be 15,000. So lowest of all these three will be the amount received, that is 12,000, that is going to be exempted. And because received exempted same, so taxable value will be 0. Now the fourth calculation is for only January months. So for January, the HRA change 7,000. Rent paid is 8,000 for 1 month. 10% of salary is 1,500. And 50% of salary is 7,500. So that will come 6,500. If you see the solution in study material, you might get confused, but do not confuse. This is exempted. You can solve it like this, no problem. 500 rupees is taxable value. Now the last is fifth case from February till March. 2 months case situation. We have to calculate 2 months. So now HRA is 14,000. The rent paid is again 16,000. Salary change. So now 3,300. That will come 12,700. Now 50% is salary will be 16,500. This is going to be exempted, 12,700. Remaining 1,300 is going to be taxable. So if we taxed all these taxable value, we have 5 taxable value. This 1, 2, 3, 4, 5. So the aggregate, this is 5. So the aggregate of this will be 21,300. That is the way we need to calculate the HRA. Right? That is question number 1. Solution is after that. Now, second is regarding the medical perquisite. The medical perquisite questions we have discussed already earlier. We can solve it over here only. Reimbursement of following medical expenditure incurred by Ms. Rakhi on treatment of her self-employed daughter in a private clinic. Private clinic is taxable. Treatment of herself by family doctor, taxable. Treatment of her mother-in-law dependent on him in a nursing home, of course, taxable. Clear? Next, payment of premium on medical policy. Medical insurance is exempted. Medical allowance is taxable, 2,000 per month. So full taxable value is 24,000. Medical expense reimbursed on her son's treatment in a government hospital, that is exempted. Expenses incurred by company on the treatment of her minor son abroad, including stay expenses, is 1,05,000. Okay. Then we have to see the RBI limit. Expenses in relation to foreign travel on Rakhi and her son for the medical treatment, 120, 1,05,000 and 120. RBI has permitted $250. So this is also exempt. So these all are exempted. The amount we have taken as taxable is going to be your answer. It's very simple. You can check the solution also for that. Next is Mr. X is employed with AB Limited on a monthly salary of 2,25,000 per month and entertainment allowance and commission 1,000 per month each. Okay. The company provide him with the following benefit. A company owned accommodation is provided. You can see whenever they will ask the question, they will tell you that either you have to apply section 15 BAC or not. So when the salary question is going to be framed in the examination, the examiner will definitely going to give you the instruction about how to solve this as per old default tax regime or optional tax regime. So a company owned accommodation has been provided to him in Delhi. Furniture costing 240 was provided on 1st August 2023. So in this scenario, in this question, basic salary is 3 lakh. The entertainment allowance, 12,000. Deduction of entertainment allowance will not be available because he is not a government employee. So the deduction part, this deduction cannot be claimed. The commission is of course 12,000. He has provided with a rent-free house. And as per the information given, 15% will be taken for the monetary salary. So we have the monetary salary value. We need to take the 15% of it. So that will come 48,600. He has also provided some furniture value, which is 2,40,000 rupees. So 10% of that. And it has been right from August. So only 8 months calculation will be done. That will come 16,000 rupees. So furniture value is 16,000. He has been provided a interest concessional loan from his employer. The SBI rate is 12.75% and employer is charging only 6.75%. So the benefit is 6%. The loan value is 5 lakh. 6% for 9 months. So that is 22,500. Now the transfer also, an asset has been transferred. That is costing, just a second. His son is allowed to use a motorcycle to the company. The company has purchased that motorcycle for 60,000 on 1st May 2020. The motorcycle sold to him on 1st August. So technically, 3 years motorcycle has been used for 3 years. So it has been purchased by the company for 60,000. Motorcycle will form in the other asset, which will 10% reduction value as per SLM method. So for 3 years, we can take the reduction value in aggregate, that will come 18,000. So the value was 42,000. This motorcycle has been transferred to the employee for 30,000 rupees. So that is 12,000 perquisite value in respect of this. So I guess we have, and the use of motor car also. So motor car 60,000, sorry, motorcycle used by employee son for 4 months. After that, it has been sold. So that 4 months use value will come 2,000 rupees. So aggregate is gross salary 4,25,100. There's a professional tax. So this scenario, deduction is 50,000, stand deduction. And I guess professional tax has been paid 2,000. Entertainment allowance deduction cannot be claimed. Balance zeros, net salary. That was question number 3. Now, question number 4. It's regarding Balaji employed as production manager. Furnish you the following information for the year 31st March 24. So the basic salary for 7 months was different. Till October, it's 7 months. So our basic salary will be 3,50,000. And from November till March, that means for 5 months, it is 3 lakh rupees. So our basic salary is technically 6,50,000. DA 40%, that is 2,60,000. Nothing given in question, so it will be assumed as non-term. Bonus will come 70,000 because it's a bonus equal to 1 month salary paid in October 23 plus DNS allowance applicable for that. So basic salary in October was 50,000 and DA is 40% of it. So that will be 20,000. That is our 70,000. Provident fund contribution, RPF, is 16% of basic salary. That will come 1,04,000. And up to 12% is exempt. So that is 78,000. So taxable provident fund is 26,000. Professional tax paid by employer is 2,000. That is also going to be treated as our perquisite. Laptop and computer has been given to the employer. Facility of laptop, computer has been given to the employer. So that's taxable value is always nil. There is no taxable value for laptop or computer which has been given to the employer for the purpose of use. Now the motor car owned by employer for such cubic capacity that is exceeding 1.6 liters. So 1.6 liter equivalent to 1600 cc provided to employee from 1st November. So November, December, January, February, March. Only 5 months car facility need to be taxable for both official and personal purpose. So car is from employer, used for both. Repairing, running maintenance is 45,000 from November till March were fully met by employer. The motor car was self-driven by the employee. So expenses met by employer, used for both purpose, and it's more than 1.60 liters. So 2,400 rupees per month is going to be taxable, which will be 12,000. So these expenditure is irrelevant. Chauffeur is not provided, so we will taxable 12,000 rupees for the purpose of car. Leave travel concession provision says his wife and 3 children one daughter age 7 and twins age 3. So that means single child has taken birth before twins. So all will be eligible for exemption. So there is no taxability in point number 8. Clear? No taxability for laptop. This is going to be taxable with 2000, which you can claim deduction from your gross salary. So reduction of 50,000 and 2,500, because out of this 2,500, 2,000 paid by employer. That is will be your perquisite, but for the purpose of deduction, full payment going to be reduced. So there will be two deduction. One is standard deduction 50,000 and the other is professional tax deduction, that is 2,500. Next is question number 5. Question 5 has a different case. So I need to make you understand this case also. In question number 5, it has been given. So if in the question the basic salary is given in a range base, like it has been given in question number 5 that Mr. X is a regular employee of Rama and Company in Gurgaon. He was appointed as on 1st January 2023 in the scale of 20,000 dash 1,000 dash 30,000. Now this is a different kind of basic salary which is given in this question. So if the basic salary given in some scale or range base, so for our previous year or for our assessment year, that means for 24-25, we need to take the basic salary from 1st April 2024, 1st April 2023 till 31st March 24. So if the range-based salary has been given in the question, what does it mean? It means that at the time of appointment, the salary is 20,000 per month. That means from 1st January 2023, the salary is 20,000 per month. Dash 1,000 means after exact 1 year. That means from 1st January 2024, there will be an increment of 1,000 rupees per month in the salary. So that means from 1st January 2024, the salary will be 21,000 per month. And after every year, it will increase. That means from 2025, now it will be 22,000 per month, because this is called the range barrier. From 1/1/2026, it will be 23,000. So it will increase 1,000 every year from the same date until it will be 30,000. So once your salary, this increment reach to 30,000 per month, then it will remain only 30,000 per month. So this is the meaning of range, that if the range has been given at the time of appointment, and this range meter means that salary will increase exactly after 1 year from the date given over here. If it has been given 1st July 23, that means it will increase from 1st July 24, 1,000 after 1 year. And it will increase till the salary reach to 30,000. After it will remain constant 30,000 per month. Suppose in this question, there's a range also given after 30,000, 2,000. So that means after 30,000, whenever it will reach 30,000, then it will increase after 1 year with 2,000, yani 30,000. Then again, next year, 34,000, it will continue as on. So in our question, it has not been given. It is up to over here only. So that means I need to find the basic salary with the help of this range. Now for our previous year, which is 23-24, from April 23, how much will be my salary? Because the salary has given from 1st January 2023. So from April, it will also be 20,000 per month. But from January 2024, it will increase to 21,000. So technically from January to March, it will be 21,000. And from April to December, it will be 20,000 for 9 months. So it will be 180 plus 63,000. That will be my basic salary. So remember, this is a very important question because I have explained you a different kind of range salary questions you need to solve. Because if you are not able to solve the basic salary correctly in a salary question, your maximum things is going to be wrong, like your HRA, your gratuity, your leave encashment, your rent-free house, your provident fund provision, everything is going to be wrong because they only based upon basic salary. So in the salary question, be very careful to find out the basic salary. Once the basic salary is wrong, almost 80% solution of the question will be wrong. So please be careful. So that was question number 5, calculation of basic salary. Other point of this question is very simple. Even I have solved it for you. So that was our basic salary in this question. So basic salary will come January to March, that is 2,43,000. Then DA has been given 10%. So that will be 24,000. And it has been given as a retirement benefit. That's why it will be terms of employment. Next, RPF, 15% contribution, 3% is going to be taxable. That will be 8,019. Then rent-free house also been provided in this question. That is 15%, and rental value is given. Rent paid is 10,000 per month. So rent paid is 120 or 15% of salary. So for salary, we will take basic salary. That's a monetary payment. DA as per terms of employment. So we will take DA also. And there is one more thing. 21,000 bonus also is there in the question. That is also a monetary payment. We will take the bonus also, monetary. And there is a allowance also, which is given in question. There is a telephone allowance. That is 500 rupees per month. That means 6,000. So aggregate of these 4 value, this, these are the 4 monetary value. 15% of this we need to take. That will come 44145. So 120 or 44145 will be the lowest, will be our taxable value. That means this value. 6,000 is our telephone allowance. We have already taxed it. Medical facility, 25,000 taxable. One housekeeper has been given. That is 12,000 taxable. Perquisite. Gift voucher value is 10,000. Either we can taxable the full 10,000 or we can taxable the 5,000 value. The gift voucher value is going to be taxable. We have the full solution after these questions. So deduction of 50,000 will be provided. That will be our answer. Clear? You should practice yourself. If there is any problem in any point in any question, do not worry. I am still here. I am still here for you for next 7 lectures. Our next lecture for income from house property, which is going to be held on now 14th of November. So you can ask me the salary scenario questions problem. If there's any question problem, you can let me know. I'll solve it for you in the next session also. Clear? So please try question number 6 also. These again, like having same provision what we have discussed, like gratuity, leave encashment, etc. I believe you can solve it. Again, question number 7 is a very simple question. You can solve it in like taxability, non-taxability provision, and we have the answers also, solutions also. So if there is any confusion, you can refer the answer, and still if any confusion, you can ask me. I am over here. I am not going anywhere. Fine. So we have completed the salary topic with example also. Chart has been uploaded on the portal. I will upload one MCQs also for day 3 today days, because we do not have that much time that I will discuss MCQs also. I am going to update MCQ number 3 sheets today with answers also. Even if there is any problem in that question, you can ask me. I will solve it. Clear? So if there's any query, let me see. Mr. Rama is asking, Sir, rent-free accommodation meaning of salary includes allowances. Yes, for rent-free house salary means including allowances. Except one allowance, what we are not going to include, that is dearness allowance, if not as per terms of employment. So dearness allowance, only that part is going to be included, which is as per the terms of employment. All other taxable allowances, etc., is going to be included for the purpose of rent-free house calculation of salary. If there is any query, kindly ask me now, or you can ask me later also. But now we will going to see each other one way, of course, on 14th of November. That will be the class for income from house property. We have 2 sessions for income from house property. That's a simple topic. You will find it's more simple because you have already gone through the salary topic, which is quite difficult in comparison to income from house property. So please, the most important thing, as I always tell you in my every class, that please revise the provision. Please revise twice. It's my advice to make you wise. Please go through the questions, illustration, numerical once again. So that will actually going to make your provision more sound, more strong. When you practice with the help of a numerical, that technically going to help you a lot in any kind of elements. So that is need to be done. And one more advice, please be safe during Diwali and enjoy a little bit, of course, but do not compromise with your studies, because these sacrifices going to count in future. So, okay, there is no such query from my side. So happy Diwali to all of you. Be safe, study, enjoy, and be a chartered accountant as soon as possible. So going to see you on 14th of November. Till that, have a great day. Have a great Deepavali. Happy Deepavali from my side to all of you. So can we close the session, Mr. Manish?